Many investors use currencies as a tool to hedge positions to try to mitigate risk. But our next guest says it's time investors consider them as an asset class. Tony Davidow, right beside me here, he's an ETF portfolio strategist at Guggenheim Investments. Tony, welcome to Money Moves. Glad to have you with us.
Deirdre, great having me. Thank you.
Big institutions and hedge funds, Tony, honestly have been using currencies as an asset class for years. So what you're talking about is the individual investor, the so-called retail investor, getting more access, more understanding to these products, right?
Absolutely. And as we were speaking about earlier, there's $4 trillion changing hands in the Forex market each and every day. Up until recently, the average investor couldn't play in that space. With the advent of exchange-traded products, now the average investor, too, can access currencies and really get...
So, Tony, you point out this large liquid market, $4 trillion a day. I mean, that's huge, and that's pretty big for a retail and individual investor to hop in unless there's some kind of structure, right? Because if you're an individual investor, honestly, it's almost impossible to go up against big hedge funds and large institutions on any call you make, no matter how right you are.
Absolutely, and we would argue, going directly to the Forex market isn't for the average investor. But again, exchange-traded products offer a vehicle that's easy to understand, easy to get in, easy to get out of.
And so how does it work, honestly? If I were interested in that, what happens? I call my broker and I say, I'd like to get into this, and here's why, and then what unit do you measure by?
Yeah, absolutely. So we have exchange-traded products. What's unique about our structure is we believe the most important thing is getting direct exposure to the underlying currency. So we actually own the Aussie dollar in a JP Morgan bank account. Any interest accrues directly to the investor. More importantly, you get the same experience of the performance of the Aussie dollar. So if you're talking on your program about strengthening Aussie dollar, it's an attractive place to be. The average investor now can invest side by side with the big institution.
Which is a good change. And Aussie dollar, as many strategists point out, is a great way to play the growth boom in China.
Absolutely.
Some of the other currencies on your watch list, the euro, what kind of research? Are you providing research as well to your clients in addition to the service, or is it just sort of service only?
We provide a lot of the raw materials, so we do have views on various currencies, but I think more than anything else, we're trying to give raw materials to the consumers. So our more sophisticated clients are actually making tactical calls, which currencies to be long, which currencies to be short. You mentioned the euro. We see a lot of long and short interest depending on what's happening in Europe today. Earlier in the year, we saw a big migration going to the Swiss franc, which became a safe haven currency. One of the reasons we like the Aussie dollar, it is isolated from what's happening in Europe, and clearly there's a lot going on there.
I know as well you've seen some interest in the Chinese yuan, the renminbi. What kind of volume are you seeing?
Not as much as we'd like. We're actually very excited about the long-term prospects for China. Clearly there's a lot of rhetoric here internally and through Europe where there's concerns about has the Chinese government artificially manipulated the currency or maintained it lower than it should be. We would say yes, of course that's the case, but we also believe if they want to be a player on the global stage and they've made it clear they want to be a global reserve currency, they're going to have to allow that currency to float over time. We're bullish on China long term. We think the size and the consumption going on in China deserves careful consideration, but we haven't seen the interest to date.
Tony, before that quick break, we were talking a lot about China, how individual investors can, through an ETF, bet on the Chinese yuan if they want to, or take a position against it if they so choose. But you fundamentally think that this is a good growth story, even if China's growth slows. You say the yuan is still a pretty safe bet in currency lands.
We would argue over the long run, certainly there's a stronger case over the long run than the short run. Clearly on the short run, we do hear a lot of language around government intervention, but I think internally within China, there's a couple competing factors. One is they're trying to fight global inflation. They do have inflationary pressures. There's a lot of rhetoric coming from the U.S. and world leaders saying they need to allow that currency to freely float. So we believe over the long run, the renminbi or the yuan represents an attractive opportunity in a way of participating in the growth in China.
Even though this idea that the Chinese government can kind of ratchet up or ratchet down the GDP as it sees fit, because I mean a lot of the strength structurally, something like 60 or 70%, is more or less controlled by the government.
Correct, but what we would say is, the one thing that we hear loud and clear is the Chinese government has made it clear they want to become a global reserve currency. In order to be a global reserve currency, they need to play on the world stage fair and free, just like everyone else.
Out of curiosity, how long do you think that is going to take? Because I was actually recently in South Korea, and that was a big topic of discussion. When does the yuan become one of the world's currencies. And many people there, even Asian economists, said, honestly, it's more than a few years away.
I think it's probably going to be a while down the road, but I would argue that if you prepare yourself for that, you'll start to see a loosening of it. I mean, people do forget the Chinese currency is in fact up over the last year, and we think it will continue to appreciate, but maybe not fully reach fair value.
So, Tony, overall, how are clients using these ETFs that you offer?
It's a great question because, as you mentioned earlier, certainly the hedge funds, the big institutional buyers have been using our currencies for years, and they're potentially long and short. They're buying baskets. They're really trading on velocity, the news of the day.
Because ETFs are about 30% of any market at this point.
Correct. They're very large, they're very liquid, very easy to get in and out. More and more what we're starting to see from individual advisors are either buying individual currencies that they view more as a long-term asset allocation option in their portfolio, or clients seeking baskets, diversifying their currency exposure across multiple baskets. And again, the beauty and the simplicity of an ETF structure allows that to happen pretty easily.
And that's obviously different than the retail investors. So you're seeing basically two groups of people use these, the institutional investors and then more and more individual investors.
More the sophisticated advisors that we're speaking to, correct.
Can you give us a breakdown, just out of curiosity? Do you have a percentage, even if it's rough?
Yeah, I'd still say it's probably 70 to 80% institutional, the big players who really understand the space very well, who are making fundamental calls. I think the greatest interest we're getting is that new audience, the advisor, who is trying to expand, much like you described in the beginning, people who are looking at alternatives and think about how they break that alternative pie into smaller pieces. So
you've seen growing interest there?
Exactly, yes.
Okay, Tony, thanks so much for coming in. Appreciate having your perspective. Tony Davidow joining us there from Guggenheim Investments. Well, from